I want to professionalize my accounts and finance departments. And for that, I have to really measure and track their performance. But these are support functions and I don't know how to set the KPIs for these. मैं क्या करूं? Hi business owners, this is your business coach Nalin Mehta. Welcome to my talk series Kya Karu, specially recorded for you. I have made 6 videos on setting KPIs for different functions. In this video, I will discuss how to set key performance indicators for finance and accounts department. Needless to say, setting the right KPI is crucial for measuring performance for any department. This is the only way to drive accountability and also continuous improvements. So here are some of the thoughts on how to set KPIs for finance and accounts team. Step 1. Identify the key areas of focus for finance and accounts department. Finance and accounts department has to typically do financial reporting, budgeting, cash flow management, compliances, financial planning. So understanding these roles is a very, very important step so that you can set KPIs for each of these roles. Step 2. Align the KPIs with important business objectives for next 1 or 2 years. So while finance has to look after many areas, there could be certain focus areas for the next year or a next year or 2. For example, if your goal is to improve profitability, you might give a lot of importance to set KPIs related to cost management, revenue growth. Or if you are going to have certain stress on cash flow, then you could set KPIs for managing receivables, inventory control. So set your objectives in line with the business focus for the year to come. Step 3. Define measurable and achievable KPIs. I'm sure you know this, but it's important enough to say it again and again. KPIs should be specific, measurable, achievable, relevant, and time-bound. For example, instead of setting a vague goal like improve cash flow, set a specific KPI such as reduce accounts receivable to 30 days by March. Measurable and achievable KPIs provide clear targets for your team to aim for. Step 4. Set KPIs for financial reporting. See, financial reporting is a critical function for the finance department. You must set the KPIs related to accuracy as well as the timeliness of the financial reports. Example, submit monthly financial report by 5th of every month, or maintain 99% accuracy in financial reporting. These KPIs ensure that financial reports are reliable and timely. Step 5. Establish KPIs for budgeting and forecasting. Now, budgeting and forecasting are very important parts and responsibilities, for the finance department and for your financial planning. Set KPIs that track the accuracy and efficiency of budgeting process. Example, prepare annual budgets, make sure that the team complies them within 5% variance, or complete quarterly financial forecast by 10th of each quarter. So accurate budgeting, forecasting are the keys to effective financial management. Step 6. Implement KPIs for cash flow management. Most businesses, cash flow is really critical for growth and survival. So set KPIs to monitor and improve cash flow, such as maintain a minimum cash reserve of 10 lakhs or reduce sales outstanding to 45 days or improve inventory turnover ratio. These KPIs will help and ensure that your business has sufficient liquidity to meet its obligations. Step 7. Set compliance and risk management KPIs. Many business owners miss this aspect. See, compliance and risk management are critical to maintain financial integrity. Set the KPIs related to this area: regulatory requirements, internal controls. Example, achieve 100% compliance with GST filing or conduct quarterly internal audits. These KPIs will help you business owner to mitigate the risk and ensure adherence to legal and regularity standards. Step 8. Focus on cost management KPIs. Cost management, you understand for sure, is essential for profitability. So do set up clear KPIs for cost control, such as reduce operating expenses by 10% within the next year or achieve a gross profit margin of 25%. These KPIs will help identify areas which will lead to improved overall financial performance for your business. Step 9, which is common to all KPIs, monitor and review these KPIs regularly. See, once KPIs are set, it's extremely important to monitor and review them regularly. You must, as an owner, establish a schedule for reviewing the performance. You could do it monthly, quarterly, monthly and quarterly. Use the insights that you regain from these reviews to take informed decisions, make the necessary adjustments, and regularly monitoring only will ensure that your team stays on track and achieves their targets. Last but not least, communicate and collaborate. See, effective communication and collaboration are the key to achieving KPI targets, especially when it comes to finance and accounting targets, where not only your financial team has to understand them well, but all your other departments also have to understand the financial KPIs, because in the end, your success is measured by your financial success. So transparency, collaboration will foster stronger commitment to achieve these KPIs, especially in case of finance, where every departmental head has to play a role. To summarize, setting KPIs for your finance and accounting department is extremely important. To start with, identify the key focus areas. List them out. Align the KPIs with the business objectives of next year or next 1 or 2 years. Define measurable and achievable KPIs for each area. Setting specific KPIs for financial reporting, budgeting, cash flow management, compliance, cost management, and regularly monitor the performance. Make sure that all departmental heads understand the financial KPIs. By following these steps, you can create a more efficient and productive environment, which will lead to a better business growth. I hope this Kya Karu video helps you in setting up effective KPIs for the most crucial and important department, which is finance and accounts. For this is the department which will lead to improved performance and business success. Thank you very much.